Hello everyone. This is the pre-market report video for 6th January 2023 in terms of Nifty and Bank Nifty. Last night before the US market opening, there were two macroeconomic data that came out were not particularly favorable for the US market. First, ADP National Employment Report, which measures the number of non-farm jobs in US. Usually, this report will release on a monthly basis as a preliminary one for the US official government report, which is due to release tonight. ADP is one of the largest human resource management company. They calculate this jobs data from the payroll information that they collect across over their 4 lakhs business clients. Anyway, according to the report, the number of jobs added in the December month was increased by 2,35,000, which was higher than the expected job addition of 1,50,000. This is good news for the job market, but it also increased the fears that Fed may keep the higher interest rates for longer, which is not what the markets are hoping for. Then the second one was the weekly initial jobless claims data. At 8:30 a.m. Eastern Time, US Department of Labor and Statistics released the number of people who have filed for unemployment insurance for the first time in the past week. This data came as 2,04,000 people, which was lower than the expected 2,25,000. Again, this is very good news for the jobs market, but it also increased concerns about the potential for higher interest rates. As a result of these two macroeconomic data, all three US major index opened gap down and closed significantly negative. In the end, last night, Dow Jones was down by 1.06%, S&P 500 down by 1.07%, and Nasdaq was down by 1.3%. This didn't have a much of an impact on the 10-year Treasury bond yield. However, it did cause the 3-month and 2-year Treasury bond yield to increase around 2.4% and 1.5% respectively, which puts pressure on the US tech stocks. In fact, earlier last night, some of the tech stocks used to trade positive, but this increase in Treasury bond yield in the last 30 minutes pushed them down to finish significantly negative except Netflix. Turning to oil, yesterday Saudi Arabia's energy minister warned the US that using their strategic energy reserve to control the oil prices could create an emergency situation. Honestly, Saudi Arabia is not happy with the way the US is controlling oil prices, and this caused the oil prices to increase by over 1%. At the time of this video, WTI crude oil was hovering around 74 US dollars per barrel and Brent crude oil was around 79 US dollars per barrel. As for Indian ADRs in the US market, it was really a tough day more than that of the US market. ICICI Bank was down by over 3%, Wipro and Infosys was down by over 2%, and even HDFC Bank was down by about 1.3%. Looking at the SGX Nifty at 3 a.m. Indian Standard Time, it closed at 18,007, indicating a potential gap down of 60 to 70 points. So that's all about what happened on global market. Now let's discuss the India related info. First, auto sector. Yesterday in the aftermarket hours, Federation of Automobile Dealers Association (FADA) released the statement that Indian government has mandated that all the automobile manufacturing companies such as car, bike and bus has to comply with stricter fuel efficiency new norms that will start from April 2023. The association warned the government that this will lead to a much higher prices vehicle and subsequently which will result in a weaker sales and thus the slower economy. Anyway, this is not good news for especially the two-wheeler stocks. Then the second info is regarding the aviation sector. Last night, rating agency ICRA released the report that Indian domestic air passenger traffic for December month increased by 15% in year-on-year basis compared to last December 2021. I think this is positive for aviation sector. However, ICRA has also maintained a negative outlook on the Indian aviation industry. Additionally, according to Health Ministry, in the Indian airport checkpoint, 11 new type of Omicron subvariants were detected among the international travelers who arrived last week. Then the final one, it's just an information since the news is already factored yesterday in the FMCG stock price. Nielsen Data, an American market measurement firm, released a huge report about the Indian FMCG companies. In short, they said that FY 2023 will be a strong year for FMCG companies in India due to the decrease of raw material prices and other favorable conditions. If required, please pause the video. This is the table of FMCG raw material cost compared to the previous 2 quarters. As a summary, the global momentum has been positive in the past few days. Despite that, our Indian market performed poor and closed significantly negative. Now, today, the global momentum itself not good. I don't know what to say. Last night, Indian ADRs were crashed over 3% and even SGX Nifty indicating a gap down of 70 points. And there is no news related to index heavyweight stocks. To be honest, it's not looking particularly good today, but we will have to see how things are going to play out. Now, coming to technical, starting with a candlestick for Nifty and Bank Nifty on the daily chart, by combining the last 3 days, it forms a bearish 3 outside down candle formation. Only on last Tuesday, both the index formed a 3 inside up candle, which was a strong bullish formation. Now in 2 days, it reversed completely and formed a 3 outside down candle formation. I mean, first a positive candle followed by a deteriorate candle and then a decrease one, which is a completion of strong reliable bearish reversal formation. This suggests that we will be seeing more downtrend in the near future. Then coming to moving averages and technical indicators. Regarding Nifty, the status is same as yesterday early morning. I mean, it's trading below 5, 10, 20 and 50 day on moving averages. So as a moving averages summary, it's a sell signal. And in case of technical indicator summary, it's a strong sell signal. RSI value has dropped slightly from 43 to 41. Now let's move on to the Bank Nifty. At present, that too dropped below 5, 10, 20 and 50 day moving averages. So as a moving averages summary, it downgraded from buy to sell signal. Even it's also same in technical indicator summary as it too turned as sell from buy. However, RSI value was still around 46.5, which is a neutral signal. As you may know, yesterday was the options weekly expiry. So I don't see much point in analyzing options open interest data at this time. Instead, I wanted to have a look at the pivot chart for Nifty and Bank Nifty. So from pivot chart for Nifty, at present the immediate support is present at around 17,915 and strong support is at 17,775. On the higher side, the immediate resistance to break is at 18,090. Then in terms of Bank Nifty, the strong support is present at around 41,850, whereas the immediate resistance is at 43,000 and significant resistance is at 43,200. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.